I think what President Trump is doing here is spreading the wealth. I mean, there are some very innovative companies who are going to accelerate this AI age, which in itself is moving at an incredible pace, like a pace that we've never seen before. What we're acquainting Stargate to, so this is the $500 billion project, is to the building out of the highway system in the United States. If you look back and put that investment into 2025 dollars, it's roughly the same amount. So these are the digital highways that are going to transform everything. They're going to transform everything and really accelerate GDP growth in a way that I think most people do not understand right now.
Cathie Wood explains that current U.S. policies are acting as a catalyst for a digital transformation similar to the historic investment in the highway system. She sees massive investments in artificial intelligence as creating digital highways that will drive rapid innovation and economic growth. She also warns that traditional U.S. tech giants, which have heavily invested in advanced hardware, might struggle to earn returns as cheaper, open-source AI alternatives become more prevalent. This shift could erode the premium these companies have long commanded. Overall, Wood believes this change will boost global productivity and reshape the tech landscape, marking the end of an era of U.S. market exceptionalism and ushering in a new, more competitive phase in AI development.
What are you taking away? NASDAQ futures down 2.6% at time of, as I'm looking at them right now. What are you taking away from a market's perspective about this wake-up call?
I think it's really massive, and I think it's massive for two main points. It's not just about the challenge to US hegemony in the space. It's not about the disruption potential there. That's a kind of a side story. And I think Robert Lee's analyzed it perfectly there and summarized kind of the sector challenges there absolutely perfectly. And that doesn't change the fact that Nvidia still got monopoly in the space, and many of the big names do as well. The reason this is such a game changer is that it's about cost. It undermines the immense amount of money that's been spent on hardware by the US mega cap tech stocks. Sure, they want a dominant position, but it now looks tenuous that they're going to get a return on that investment. That was always difficult. But now, and this is the second aspect, now that this is open source, it really makes it very unlikely that they're going to be able to justify the return on investment, given that there's a much more cheaper alternative out there for the world to use. So ultimately, this is good for global growth. It is good for global productivity. It is positive for global stocks, but it deeply undermines the massive premium that we pay for US mega cap stocks, that exorbitant privilege that we've got. And therefore, I think this is the catalyst that people are looking for. Combined with it is a perfect timing of Trump really kind of putting an extra cost on US trade. I think it is the catalyst to end 15 years of US stock market exceptionalism.
Yeah, I mean, it's rocking the markets, it's rocking the AI community. So first, just kind of straighten us out. Give us your perspective. You're certainly an expert on this through your work at the Goldman School of Public Policy, also your work with Alphabet and Microsoft. When we're talking about this AI race between China and the US, what does DeepSeek represent? The thought was that the US had a significant lead, maybe, 4 months, 6 months. Has that changed in your mind with this development?
Oh, absolutely. I mean, the world has long looked to the United States to be the leader in artificial intelligence, but these recent model releases from China have demonstrated its ability to leapfrog and catch up with US tech giants and achieve groundbreaking results without the luxury of advanced hardware, which is ultimately challenging everything that we thought was necessary for innovation in the AI space. See, what DeepSeek represents is that AI innovation isn't necessarily driven by the companies with the largest pockets or the fanciest hardware, but that collaborative development approaches can actually end up providing market-leading technologies. So this AI race truly isn't just about US versus China. It's about which approach to developing AI is more effective at creating innovation. Is it the private closed source development that we've been following with companies like Microsoft, OpenAI, and Anthropic? Or is it open source development, which companies in America like Meta are taking that approach, which we've seen with DeepSeek? Another AI model coming out of China, which was also also released around the same time as DeepSeek is called Chemi K15. And what this model does is actually outperforms DeepSeek in many of its reasoning and mathematics benchmarks, and it offers unlimited free usage, which highlights that this collaborative development is not just a one-off success, but a new pattern that's going to shape the AI industry moving forward. And these US tech giants may need to adjust their strategy to keep up.
And I think there is definitely room for concern. And as I mentioned earlier, China down close to 20%, right? And how they have lost market share to other players in China, I think that is concerning. The multiple, obviously we talk about the multiple when the stock rose a lot. It ran a lot last year. So obviously the multiple has expanded, and to Bryn's point, the revenue growth hasn't been there. The earnings growth hasn't been there. I do continue to like the services business, but that needs to take more of a margin going forward. So yes, I think there's definitely concerns about the name in general, and I think that's why the street is kind of weakened.
Let's be clear. I mean, Bryn, there was a lot of conversation that the whole move last year was punk in Apple. Based on what? Right? From WWDC until, the end of the year, the stock went up a ton. Based on what?
$110 billion buyback.
Right. Well, there you go. I mean, this is where, they've done a masterful job of managing their balance sheet and, to their point, returning cash to shareholders via the buyback. And they continue to do that. And I think between the buyback and the anticipation of this AI software inside of the 16, but that just hasn't manifested itself. And I look at my iPhone 14, which works wonderful. I have my Perplexity, my Chat GPT, and my Copilot, and I'm great. And so I just think they've missed the mark here at this point. Do I think we're going to go buy a different iPhone, like a Samsung? No. But I do think, to Jason's point, you cannot discount China. And China is such a massive market. And even though Apple is still in the top 5, just not being able to have that excitement by the Chinese investors, the Chinese buyers, to buy Apple, I think is going to continue to be, punitive for them. And also, let's see what happens with currency. I know a lot of these tech names, are gonna talk about the dollar strength last quarter, and let's see if Apple talks about that as well.
Got some news on Meta as we're having this conversation. I want to go to Julia Borston for our news alert regarding that stock. What do we know, Julia?
Scott, Meta is announcing that it is beginning a test of ads in Threads. Threads is its fast-growing new social app. They say it's for public conversation. They are also announcing that the Threads community now has 300 million monthly actives, and 3 out of 4 people on Threads follow at least one business. So it's a natural segue to introduce ads on Threads. They say these are going to be AI-powered ads and backed by Meta's ad system. Advertisers will be able to extend their existing ads from different platforms such as Facebook or Instagram onto Threads, and they're also integrating Meta's brand safety and suitability standards and controls. Of course, this follows Mark Zuckerberg saying they're shifting away from third-party fact checkers to a community note system, so they want to make sure advertisers feel confident in where their ads appear, and also are going to give controls for what ads people see. So this is just the latest news from Meta today after they announced $60 to $65 billion in capital expenditures focused on AI this year. Back over to you.
Julia, thank you for that. That's Julia Borston. I don't see very much pessimism whatsoever about Meta heading into their number next week. Baird today, overweight, 680. They're expecting solid results as well. A guidance they expect to be good, growing their users, impressions, ad prices, etc.
So first of all, ads on Threads is exactly what you want. It means that is maturing, and that is beginning to grow into what the Meta believe the product should be. But it's, remarkable. On a day that you announce spending at $65 billion, it comes in ahead of the 50-something billion that the street is expecting. Your stock trades to an all-time high. So it tells you the strength about this company. It's interesting because you were mentioning before how the analyst community thinks about the Magnificent Seven, and I was doing this real time as you were talking. So 5 of the companies, excluding Tesla and Apple, have a buy rating, a percentage buy rating of at least 80% of the analysts have a buy. Apple is only 62%. That's probably the lowest figure that I've seen in terms of a percentage buy rating for Apple in many, many years.
This transcript discusses how massive investments in digital infrastructure and artificial intelligence are set to transform global productivity, much like the historic investment in the U.S. highway system. It suggests that while these advancements can drive significant economic growth, they also challenge the long-held dominance and high valuations of U.S. mega-cap tech stocks by offering cheaper, open-source alternative. The dialogue further examines the intensifying AI race between the United States and China, noting that China's innovative, cost-effective approach is reshaping the competitive landscape. This shift may signal the end of an era of U.S. market exceptionalism and prompt a rethinking of traditional investment strategies. What role do you think open-source development will play in the future of AI? How should traditional tech giants adapt their strategies in response to these changes?